Current state of the Indian economy. It's still at 7.8%, one of the fastest growing economies, major economies of the world. Let's find out where we stand. Nadia Elbilassy, market analyst at Equiti Group, joining us for perspective, along with independent market expert Mahantesh Sabarad. Mahantesh, to you first. Like my colleague was pointing out, government spending is definitely up. Private spending is suddenly trying to keep pace with the kind of capex that the government is putting in. At this point in time, we're seeing growth in the manufacturing sector. Do you think that this kind of GDP growth can sustain?
No, I think we can potentially grow upwards of like 6.5%, 7%, maybe the lower band of this 6.5 to 7% kind of growth. Now, that statistically tells you that it's still lower than the 7.8% that we have clocked in quarter one. But I must point out that the quarter one GDP estimates very often are more of estimates linked to indicators of economy, which are not necessarily robust. Take agriculture, for example. The agricultural growth, which is 3.5%, which is built into the Q1 number, is likely to get revised lower, simply because our monsoon progress has not been great. That has a sort of an effect in the subsequent quarters for manufacturing, for electricity growth, and so on and so forth. Take electricity growth for this quarter. The subsegment of the GDP number, which is water, electricity, energy, etc., is just grown 0.7%. So to me, we are likely to see a downward revision in the quarter one number by the time we reach the quarter three, which is the normal kind of practice that happens. But it will also have a pronounced effect going forward in the subsequent quarters in terms of decelerating the growth that we have seen thus far.
Just as an extension of my question to you, as far as the RBI's plan is concerned, is the economy behaving according to plan? Because the idea was to be able to control rising prices. At the same time, growth needs to be sustained, but it is definitely going to hit the kind of lag effect that you typically have with interest rate hikes. Do you think that we are still to wait some more before we actually see the impact on India's growth story?
So basically, RBI has been, I would say, doing well in terms of controlling the inflationary expectations that have come up in the economy. So naturally, the effect of that is there will be some sacrifice on the growth part that you will see because of the high interest rates. Now, the lag effect of that high interest growth will start getting noticed towards the second half of the fiscal year. But to my mind, a large portion of that also will be dependent, like I argued earlier as well, will be dependent on the monsoon progress ahead and the demand kicker it kind of brings in, the demand depressor or the demand kicker it brings in.
Sure.
Coupled with what is likely to happen globally. Global economies are not likely to see upward revision in their growth numbers, and that should potentially be a bit of a depressant for India's case as well.
Nadia, would you agree with that? The Indian growth story, Nadia, is in a sense contrary to the global growth story right now. China is the weakest link, of course, but global economists, they're worried about these tightening financial conditions amidst rising debt in world economies. How do you see India's GDP growth right now against the kind of growth numbers that you're reading across other economies, like that of the US?
Right. So definitely there has been somehow a slowdown in most global economies, not just India. For sure, India is now taking a lot of traction because of China's slowdown and China's problems that keep on arising. They have stimulus measures, but they still have a lot of problems, and fear is mounting and uncertainty going on into China, which is moving on into India in a positive light. It's shedding positive light into India, and that's what I see from my perspective.
Mahantesh, the pickup that we are seeing in the services sector activity, do you think that's going to continue over the second quarter and perhaps help the growth in private consumption? And if that does indeed happen, is that going to be the spur that the markets need to move up?
Now, let's look at it individually. The service sector is indeed growing quite fast, and it has been the nature of Indian economy that this service sector has been accelerating ahead of the manufacturing kind of growth. While that said, much of the services sector growth is largely dependent on services that we render across the globe. Okay, take the IT sector for example, which is a big exporter of services out of India. Not just that, government itself is a big consumer of services. The whole digitalization growth, the digital economy growth that has been happening, given by the push through the digital payments kind of infrastructure that we have grown over the years, is pushing government's service consumption up as well. As far as the consumers' consumption is concerned, there is a bit of a problem here, simply because the interest rates are at a peak, number one. Number two, the manufacturing sector, like I said, is quite lagging. And I suspect, despite the investment intentions that are coming up, with the Chinese economy growing slow, a lot of raw material ingredients that Indian manufacturing companies need or require or are critical or crucial for the Indian manufacturing sector growth might provide a bit of a problem and might present a bit of a problem. Because if there is, let's say, APIs for the pharma sector, if there is not sufficient API availability for the pharma sector coming in from China, probably our manufacturing sector will stall. Temporarily though, because India is also one of the largest API producers. It will take time, these things to come. Semiconductors or electronics consumption that India does, the manufacturing industry that does, will be largely coming through the China route.
Correct. So we are trying to fortify our manufacturing base. That's a given. But it is going to take some time before we are able to see that much more private capex. But Nadia, how do you see India's balance of growth and inflation control versus other leading economies? Does the RBI's rate action in the recent past inspire faith in India as an investment destination among foreign institutional investors? Has that changed over a period of time as well?
Definitely, as India grows with this positive traction over investment, and especially since the beginning of China's having the problems with the property sector, we've seen a lot of traction go into India, and that's promoting confidence within investors. It's promoting a lot of new opportunities and business openings in India itself. So there's definitely going to be growth there.
So in terms of the demand kind of situation, and there is a certain demand-supply mismatch, Mahantesh, we're talking about the fiscal deficit situation right now that the government has with the kind of capex that they have decided to go ahead with. What are the potential risks to the Indian economy in the near future?
Okay, so one of the component of the fiscal deficit for the government is interest payments. And because of the so-called hawkish nature of RBI, which is the rate increases that we saw, the quick rate increases that we saw last year, has really altered the fiscal arithmetic for the government. But thankfully, the good news ahead is that we will see the interest-related outgo from the government's expenditure kitty gradually coming off, and we might potentially see also interest rates falling off ahead. I'm not saying it will happen in the next quarter, but we will see one rate decrease from RBI coming in at least this fiscal year. That said, that should help the government's fiscal arithmetic a little bit. At the same time, the tax revenue growth for the government has been thus far quite robust, particularly on the GST side. If we are going to see moderating inflation kind of coming in ahead, while GST on one hand will start to peak out in terms of overall growth, we might be able to see the direct collections actually going up. Who knows, somewhere down the line, the government still has a policy lever to change certain tax rates, or like they did last year. They imposed export duties on steel exports to petroleum exports and things like that. There are these levers available still to the government to alter the fiscal arithmetic in their favor.
Well, we'll see exactly how that is done. But Nadia, a lot of our inflation story depends on how oil prices move. How do you see them benefit India now at these levels and the kind of levels you're working with for the future?
Well, with supply shortages everywhere, I think India can benefit from that greatly. Oil prices have been in a really elevated level, supported definitely by OPEC plus voluntary cuts, and we do expect another cut extension in October, and that's kind of supporting prices right now. That's actually the main thing supporting prices right now. Of course, other than the fact that we have Hurricane Idalia, that's also affecting supply or mounting fears on supply shortages. So I think that would be a positive thing for India in terms of prices going higher and benefiting the Indian economy.
Well, the truth is that at this point in time, India is at a 4-quarter high when it comes to their GDP numbers. And as far as major economies go, we seem to be growing at the fastest clip. We'll see if that sustains or not. Several moving pieces. But Nadia Elbilassy and Mahantesh, Sabarad, many thanks for joining us with your perspective. Thanks indeed.
Thank you.